Okay, welcome everybody. Thank you for being here today. We are broadcasting live from Salt Lake City, where Jared is, Park City, where I am, just so happens, and Wendy is in Chappaqua in New York. So thank you all for sharing your afternoon with us. We're super excited to introduce you to Jared. Just a couple Zoom housekeeping items while the room populates here. As you are all probably accustomed to by now, we can't hear or see you, but we welcome and encourage the questions in the chat box or the Q&A. And both Wendy and I are co-hosting this today. And so many of you know Wendy, and so we welcome her to Family Office Insights. This will be our first co-hosting event with us. And so we're super excited. And as you also probably know, we've known each other for a million years. And I will say it publicly as a matter of record on this recording that she's the only one that I trust to do these in my stead. Not that I'm so special, but she'll probably do them better than me. So we're super glad to have her here today. As a matter of record, this is being recorded. Not that we're going to be recording you, but if you care to share it with others after you've had a chance to listen to the presentation or care to look at it on the Family Office Insights YouTube channel yourself to review anything. And then, of course, we're going to make sure that everybody who attended or registered gets in touch with Jared directly, and you're welcome to open that dialogue directly. I see a lot of great friends on the attendee list now, so thank you for all being here today. So with that, I'm going to hand it to Jared. Wendy and I are going to go dark and silent, but we'll be paying attention. Jared, there you go. Welcome.
Thank you so much, Arthur. So I thought what I would do is, so I came to meet Arthur through a friend of mine who attends our annual crypto event. So it's great to connect with you, Arthur, and here on the platform. I thought what I would do is give my background and then talk about how I came to invest in crypto, talk about what we're doing with the fund, and then see what questions folks have. Oh, there he is, Steve. Yeah, so Steve Masura, he's here. Thanks for joining. Steve is who connected me with Arthur and has been a great part of our annual event we've been hosting. We really kicked it off in 2017, so chat about that. So my background, I started in venture when I was a junior in my undergraduate program of finance at the University of Utah. We had the idea to create a student managed venture fund with a 2-in-20 structure for institutions, which had never been done before. I remember pitching Tim Draper as a 20-something-year-old on the idea that students would manage a venture fund, and he started laughing at me, and then committed our first $1 million. UBS and Morgan Stanley invested in that fund, and we ended up raising an $18 million fund for students that's still around today, for students to invest into venture capital. And many of the students who participated, it was a highlight of their, pivotal for them early in their career. And the students earned deal flow by doing due diligence for VCs and just turning over stones. I was on a board at that time with a guy named Don L. Lucas, who's famous in Silicon Valley as being he was really the early investor and board chairman of National Semiconductor and Oracle. And he became a mentor and a friend. And I launched Peer really early on in 2008 as a mentorship with Don. He was instrumental in my career in teaching me really his methodology for investing in venture capital. I first became familiar with crypto in 2013 over a lunch with an Argentine entrepreneur who told me I was a silly American who didn't understand currency, didn't understand the power of a decentralized currency. And I made a curiosity level investment at that time. I didn't come to really dive in deeper and understand the broader impact of the technology until late 2016. And when I did, I became really quite captivated that this had the potential to disrupt many industries, including my own. And I felt that a strategy focused on crypto venture capital strategy focused on crypto would outperform traditional ventures. So I thought, why am I going to do anything else with my time and energy but develop specific knowledge in the industry, be very deliberate about developing a network in the industry, because I believe in the potential of this new technology. And so that's really what I've been doing since 2017. And really what I'm all about is applying what Don taught us. There's several ways where I would say that peer is one part of a complete breakfast in crypto. There's lots of different strategies. You can invest in the bellwether tokens like Bitcoin and Ethereum. You can invest in hedge funds, which employ all kinds of strategies, taking advantage of arbitrage opportunities or inefficiencies, which exist pretty broadly in crypto still. And then really what we're doing is venture, applying these same tools and methodologies that Don taught me in this new market, in this new category. And it was really quite simple what he taught us. One is invest in really outstanding people, outstanding smack you in the face entrepreneurs in large markets with favorable competitive dynamics, with some form of defensibility or some form of advantage, with reasonable capital requirements to build whatever it is we need to build, which is also very favorable in crypto. And finally, that there is some mechanism of making money, whether that's gross margin on a product or service, or the mechanism around a utility token. But there has to be a way where the physics of business can still create value for investors. And I would say hovering over that whole strategy is simply the idea that we feel we're discovering truths about what's going to be true about the world in the future that haven't yet broadly been discovered. And I feel that every day when I look at different projects and get conviction around certain ones where I feel that, wow, this is a truth about how the world, it's not unlike how, we didn't really know we needed a search engine until we got a search engine, and now we can't imagine a world without it. I feel that same conviction around. We could be wrong about that conviction in certain cases, but we feel that conviction about some of these opportunities, that these are things that will be mainstay pillars of the world, that are truths about the world that haven't yet broadly been discovered. And because they are truths about the world, people talk about Bitcoin and the power of decentralization being important to it. And we really think about decentralization, but we think about what's going to be broadly and deeply adopted. So decentralization talks about the broad, and we're really focused on what has the chance to become a deep part of culture. I think that decentralization is important, but what's more important is how these products or services are adopted broadly. And what's powerful is about Bitcoin as an example of what we're talking about with crypto is that it has many, Bitcoin has many different participants. People participate in myriad ways that cumulatively have this almost emergent property of this platform that people participate, whether some are building companies on layer 2 or layer 3 or participating with the platform in some ways. Even many of the older financial institutions in the US now are participating with the platform. Other people are using it simply as a store of value. Other people are mining it. Other people are running nodes. And so the cumulative effect of this widely adopted platform is that it exists very deep in culture, in the culture stack. And that's really what we're looking for in terms of new projects. And I like to use this analogy. I haven't yet really shared this broadly, so you guys will have to tell me how this lands. But I really like to think about it in terms of a playground, and so if you think about version 1.0 of the internet as a playground where everybody showed up and it was wide open, anyone could really build anything and participate. And then, it was an exciting time and people built all kinds of interesting things. And then the big kids showed up and they noticed what people were playing with. And they said, hey, look, we're going to make shinier, better versions of everything you guys are playing with. And we're going to let you play with them for free. And everybody loved this. And it was really exciting. And everybody adopted these tools. and started playing on the playground. And after a while, some of the kids noticed that the big kids controlled everything. They controlled the whole experience on the playground. They controlled who won King of the Mountain at recess. They controlled what information everybody saw. They controlled the games. They controlled the information. And so they decided to leave and start a new playground. And when they got to the new playground, they started experimenting. And they had to do away with a couple of cultural norms at the first playground. The first one was that the playground equipment now belongs to everybody who participates in creating it. And then secondly, that it's not just free, but the good thing about the new playground is you could earn rewards all over the playground by simply participating in building this new playground equipment. And what the kids at the new playground discovered was that this was pretty exciting. And that one of the really cool features of the new playground was that the equipment was kind of indestructible in some cases, where everybody participated in building it, and it made the first playground seem kind of flimsy. So the kids decided to go to the first playground and let everybody know. So they go to the first playground and they say, hey, everybody, you've been productized by the playground equipment. And so you need to abandon it and come to the new playground. And people look up for a second, and then they look back down and they just keep doing what they're doing. And then this girl has a clever idea. So she goes back to the first playground. She climbs the highest structure on the playground, and she yells at the top of her lungs, hey, there's a new playground where everybody can get rich. That's what's happening here is we've discovered this technology, which it is new, it is discovery, it is pretty foundational to
hang on, Jared.
Yeah.
The last like 10 seconds got a little carved up, and your signal went red again there.
Oh, okay. Where did you lose me?
Right after she shouted that there's a new playground in town.
Yeah, so one of the girls in the new playground, very clever. What's that?
I was just saying the signal's fine now.
Oh, okay, great. So one of a very clever girl from the new playground goes to the old playground, climbs to the highest structure, and says, hey, everybody, there's a new playground where everybody can get rich. And then this time people put down, what they're doing, and they start to migrate over to the new playground. And that's really what I see is happening in this new iteration of the internet, is that people are being drawn by these incentives, but the qualities of the new playground are pretty foundational, that we've discovered a way to create digital scarcity. That's really a new thing. And we've discovered a way to create structures that are indestructible, that are quite robust, that are owned and participated by everybody. And what's important about these is not just the platforms themselves, it's the companies that can now create enterprise on platforms that they have confidence are not going to change at the whim of Apple's iOS team or somebody at Facebook or somebody changing the YouTube algorithm at Google. I think that now you have the ability to create both new platforms that are robust, that have this different quality. You're able to, with digital scarcity, express ownership in a trusted way that the whole community can agree upon. These are just foundational new inventions that are creating this value that's bringing everybody over. But the net of it is that these new structures are more permanent and more lodged deeply into culture, which is why we get excited about it. So that's what we're doing. We're investing in the new platforms and investing in companies building on the platforms. We're investing in really bold and risky ventures. And this is a great time just as a reminder that this is really just for accredited investors. This is very, folks should think about, allocating to this in a way where it's really a minority of their portfolio. These are risky adventures, but at the same time, I do believe that they have the chance to really be fixtures of the new internet and culturally going forward.
Would this,
in terms of,
I'm sorry. I'm just interrupting because I thought maybe this would be a good time. if you care to share, or whenever you're ready, an example of that, like something that you're contemplating investing in, is by way of an example. And it's okay if you don't want
Yeah.
to do that,
So
but
look at this. Yeah. So So just to put a fine, I'll talk about what we've invested in so far, and then just to put a fine point on that, though. So the way to look at this in terms of risk and return profile is, it could be that this ends up being, we really timed something special in terms of, this could look like an outperforming venture fund. It could be in line with a regular venture fund. There is, as folks know who've looked at crypto, there are really some exceptional returns happening. Uh, that's going to eventually catch up with gravity. These things will regress to a mean at some point. Trees don't grow to the sky. Anybody that tells you there's not risk in crypto, run the other way. So we could end up looking like a great performing traditional venture fund. We could be capturing something special where it ends up being higher than that, or we could catch the opposite side of that same risk of doing something kind of bold and early in crypto, and it be underperforming relative to traditional venture. But I believe because we're doing this strategy, we have the chance to be an outperforming fund. In terms of what we look at and what we're investing in, there's really three kinds of deal structures. One is investing directly into companies, and they're maybe building something on a platform. Maybe they're eventually going to launch a token or platform with that company, but some of it looks like just a just a company investment. And then sometimes it's a company plus a token, which is a deal we just invested in. And then sometimes it's a token only. And we've done all three of those structures with the first 5 deals that we've put together so far. And so maybe this is a great time to go. Most of what we're doing, though, is company investment. That would probably be the majority of the investments. To date, we've made 5 investment commitments. We've closed on 4 of those so far. One of the first investment we did was eco.com, which is backing Andy Bromberg, who was the co-founder of CoinList with Naval Ravikant. That was a co-investment with Andreessen and Founders Fund. They've had an up round since we invested in that last fall. In February, we invested in a project called Eco, by the way, is in fintech. They say, we're not a bank account, a credit card, checking account. We're better than all those things combined. They're competing with several banking services and have a token as a part of their strategy as well. Notional .finance is a project we invested in February alongside Coinbase Ventures and Parify. Notional, we believe, is a leading candidate to really own fixed lending on chain. So if you look at projects like Aave and Compound, if you're familiar with either of these, they're quite valuable, and they do quite a bit of variable rate lending on chain. This is a chance to really combine lenders and borrowers for fixed rate lending, asset-based lending, with nothing in between really but code, which is exciting because nothing with that short a distance has existed between borrowers and lenders at the kind of scale that they can achieve. And that token is scheduled to launch later this year. So we're excited about that one. Coinbase and Parify are the co-investors. We just invested in a project called Inc. Incorporated, so Inc. That is a co-investment with Mark Cuban and Ashton Kutcher, and it's a NFT strategy. So it's a tool for creators that I think is pretty clever. They're wanting to operate in kind of stealth mode until they launch, and they've also received term sheets for up rounds since we invested. But that's an exciting founder who I know through this annual event, which is how I know Steve and a lot of folks in the industry, which we host. But that's kind of an exciting NFT company that we just invested in. And then we just invested in a company called Chintai, which is tokenizing real estate. They're starting in Singapore. It's a co-investment with Block One, with Cryptology, which is Mike Novogratz's which is a fund associated with Mike Novogratz. And then finally, we're doing an investment. I haven't closed. This should close this week or next week on a company called Operator, which is a co-investment with NFX and Galaxy Digital. And Operator is really providing web UI developers a toolkit to build, several developers are, much of the developer community is still somewhat, it takes a real commitment on behalf of a developer to understand these new crypto projects, how they can actually use them in terms of using edge network compute and file storage. If you've heard of something called Filecoin, for instance, it provides a web UI developer a toolkit to easily use some of these crypto compute and storage tools that now exist because of these token incentives and these communities around them. Now it allows people to actually put these tools into practice and to use them in a way that doesn't require that they understand the protocol from top to bottom. It kind of makes it lets them choose the AWS tools they're familiar with, or they can choose some of these new tools. So anyway, so that gives you a sense of what we've invested in and what we're doing. So how about I take a pause and look at some of these questions, because I know people have been making some comments and I've ignored all of them because I've been trying to make sure I covered what. Oh, we should talk about the rolling fund. Do we have a second to do that? Because
please
we are
do.
structuring this in a rolling fund structure.
Yep.
So I'm launching this as a solo GP. I co-host this event with Jack Herrick, who's the founder of WikiHow, and Jack connected me with Naval around a conversation around using AngelList as the back office. We decided to do that because it allows a kind of elegant solution for us to have institutional grade back office services and support, including digital token custody. And it's a rolling structure, which means investors can sign up for a quarterly commitment to the fund, and that is your only capital call. At the beginning of each quarter, there's a sort of elegant platform to log into to be able to see what you're invested in and to manage your account. And AngelList will hold in escrow all of the management fees, fund administration fees, tax and legal, everything associated with each quarter's investment in escrow. So the only capital call investors receive is this kind of very predictable, based on the quarter, and you can sign up for as many quarters as you want to. There's a minimum $100,000 investment to sign up, which is at $12,500 per quarter is the minimum. So that means an 8-quarter minimum to sign up. And we're capping the fund. Right now, we've closed just under 500,000 per quarter. We will cap it at around 2 million per quarter, because some of these, we're really focused on pre-seed, seed, Series A. I think that's where we're hyper focused on IRR versus being asset managers. So for me, that means getting exposure very early. And so some of these projects are very difficult to put a lot of capital to work, frankly. So that's our plan. So we're about a quarter of the way there. We have soft commitments in addition to where we are on what's closed on the platform. But anyway, that's the rolling fund. I'm happy to answer any questions about that.
Yeah. So if you don't mind, it's super interesting. Is the rolling fund, as you do the capital calls, invested in a net asset value across all investments as you make them? So how do you, I don't mean to get into the weeds of that, but it's really interesting.
That's a really important point.
Yeah.
So that's important to think through, is if you're thinking of investing in the fund, how do I think about how to do this? What happens is you get exposure to the investments we make on the quarters that you are signed up for. And if we don't use the capital during any given quarter, it will roll forward to the following quarter. So if you want to say, hey, I just want kind of traditional venture fund exposure, then just sign up for 12 quarters, because that would give you roughly 3 years coverage exposure to the investments we make during during that period, which would include follow-on investments for some of the earlier investments, and then any capital we don't use would just roll forward until it's fully utilized.
And so the prior investments you made before my quarterly commitment, I don't participate in.
You don't exactly. So that's one of the it's one of the drawbacks, and it's kind of it's good for the people who get in early, but yeah, that you don't participate in these investments already made. But you will begin, say, the next quarter, July 1st, investments made during that quarter.
Great, super cool. So there's a couple questions here, some of which you've covered already, but let me just say, here's a question that says, in your mind, are blockchains protocol or applications? So is a blockchain a protocol or an application?
So there's a bit of a semantic game that happens in blockchain. So I would say that when I use the word blockchain or crypto, I'm referring to protocols. I'm referring to the platforms themselves, and then there are companies that create products or services and may use some of this technology. They may use blockchain technology, which could mean a number of things. But really, when I speak about blockchains or crypto, I'm speaking of actually the protocols. And I'm really partial to public blockchains or public protocols, because those are ones that are really robust. And like I said about the playground equipment and this cultural layer, those are the things that I think have the chance to become kind of fixtures of culture. I love this comment by Christian, by the way. There is no search engine yet. Yeah, I'm hoping there will be a crypto-based one that truly is just a search engine.
Yeah, if we all had to pay for search, we wouldn't, right?
Well, we're paying for it one way or another.
Well, we're paying for it with our personal data, so we're paying for it for sure, right? But if you had to pay $1 every time you did a search, it's that would probably not work. So let's just address the track record question, simply because this is a new fund. So you want to just talk about that?
Yeah, so we don't have any. I think the question is if we have any realized exits, and we don't. We have 3 of the 5 investments so far have either had an up round, or in two cases they've had an up round, and one has a term sheet. They're in legal stage right now, closing that one. So right now these early investments, they look good, but it's been a really strong Q1 market. So it doesn't. I mean, we had this third investment we invested in, then 3-4 weeks later they got this term sheet that they are going to take some less dilutive capital at a four times what we invested on the first investment. We're up about 2 times what it was. The second one we're up about 4 times, and the third one we're up about 4 times. But again, none of this is realized. It's all very early, and it's important to think about with venture, that we sort of think about this as liquid venture. So in traditional venture, I would have said 8 to 10 years before you really have liquidity. I'd say we're really more maybe in the 5-year range. Some of these investments have a liquidity profile that makes them earlier.
So that is a long question. Let's see. Or is it a comment? I think it's more of a comment than a question. Okay. All right. So help with the math. I heard about the limitations on the quarterly commitments. What's that translate to in commitments so far in total?
Oh, sorry. Could you say it one more time?
Read the question. Yeah. So once you've realized all the quarterly commitments that have made so far, how much money has been invested in the fund?
I mean, I can tell you right today we're at 428,000 in terms of what's committed this quarter. I mean, many of these commitments, they either go out 12 quarters or 8 quarters. Some of them go out 4, but folks have said that they're interested in renewing at the 4 quarters. So it's effectively kind of the first, $4 or $5 million.
Yep.
Maybe 6.
Yep, that's close enough. I was just wondering what the aggregate was. You want to comment on that comment?
Yeah, if you look at it in terms of the 3-year deployment, it makes it look like, like the first 4 or 5 million.
Yeah.
So Jared, let me just ask you this, and because the families always ask it, what is the exit strategy on the different investments?
Well, that's really that's specific to each project. So I would say for us, on things that are already, so some things are already very liquid. So in some investments, like I said, there's a project we invested in that would be that will be liquid later this year. But in terms of exit, it'd be milestone based. So if there's a certain threshold of milestone that we envisioned when we first invested, remember that maybe that's some level of adoption or some level of valuation, then we would think, oh, this is a good time to go ahead and make a distribution and make liquidity. In terms of companies, it falls into this other category that often distribution events around companies are centered around, those more traditional liquidity events of either being acquired, or going public.
Understood. We have another question from the audience, if you don't mind.
Yeah.
So 100% of secondhand information in blockchain space is false. Do you have any access to a data science team, run your own nodes, et cetera, for reality check on KPIs?
Yes. So sorry, you said there's a lot of misinformation in blockchain. Do you run your own nodes and do your own technical analysis? Is that basically the question?
Yeah.
Yeah. So we don't. There is a lot of misinformation in blockchain and crypto. We don't do that. We're typically a part of strong. If there's an investment where there's a strong technical component, or it's playground equipment, if you will, then we're either a part of a strong investment cohort, or we have a group of companies that audit the software. And generally the companies, like that's what's happening with one of our portfolio companies right now, is they are having the software audited. And there's also the option, of using something like Nexus, which was an option for us on Notional. We ultimately didn't decide to use it, but you can have insurance coverage on these protocols that can protect you against a hack if there is some kind of vulnerability in the system. But I am. It's a great time to tell you, I'm really much more of a finance guy than a technologist. So we really do. That's good and it's bad. The good part of it is that I don't trust myself to verify any of these things firsthand, or to do the nodes. So we get kind of professional help for those things when we need it.
We have another question that says, anything trade related is run/manipulated by whales. Are you part of any whale groups, or do you have direct access to them?
Yeah, so that's a great point. And we are not, this is a great time to remind people that we are not traders. So we are not actively trading tokens. We are not rebalancing the portfolio. We are not managing liquidity to the extent, we're managing some liquidity to the extent that we're advising startups on how to launch tokens and what to think about in terms of having some liquidity in place. But yeah, that's really much more of a hedge fund related things. We do have, take this second investment we made with Coinbase. I mean, Coinbase is a whale in the space, not in a centralized exchange, and we have relationships there. But no, that's much more of a hedge fund kind of related point that we don't really do anything with.
Let me ask you a family office kind of question. So you have quarters and people can buy the quarters at $12.5 a quarter. What if a family wanted to do a larger investment, not just more quarters, but one of your portfolio companies really intrigued them? In normal investment terms, we'd say, can we do a sidecar? Can we have a bigger share of that particular company? It resonates with us or something. Do you allow that? Is there a vehicle for that, or is it strictly by quarters?
Yeah, so this goes back to our core strategy. Again, my core strategy is invest early in pre-seed, seed, Series A, we will do follow-on with the core fund, but it's very likely that the follow-on opportunities exceed the kind of core capacity of the fund, because we are quite focused on pre-seed, seed, Series A. So we do offer a zero fee, zero carry co-invest if there are folks that want to go direct, who are above a 250K cumulative commitment to the fund. And in some of those situations, we may also launch fee-bearing co-invest vehicles to access some of those kind of breakout opportunities for folks that don't want to go direct and rather have us manage that. But that is a perk we put out there, largely because I'm really focused on early stage, hyper focused on IRR, and I'm not trying to raise, you know, a $500 million. It's not an asset management play here. I really just want to stay in my lane, focus on really early stage opportunities, largely sourced out of the network I've been building over the last 4 years, and that's really my skill set.
I think one of the other questions that we're having here is where are you finding your portfolio companies?
Yeah, Steve's question. Yeah, we're investing in companies worldwide. So so far, you know, these deals have been focused heavier weighting to Silicon Valley, which is my network. I've been in Silicon Valley most of the 10 of the last 12 years. But Chintai is a Singapore based company. They're as I mentioned, tokenizing commercial real estate. They have an application forward with the Monetary Authority of Singapore. So it's really tough to do something in crypto, not be worldwide at this point. And again, this is one of the advantages of AngelList as doing back office. They are, they're a helpful check and balance on from a legal perspective on anything we do worldwide.
Fantastic. I think we have another question, and that is, do you see any utility for stable coins when CBDCs go live?
Yeah. So I think that someone could launch a strategy just focused on stable coins. I think they're going to be such a fixture of the crypto landscape, and there's some exciting stable coin projects out there. Some of them are algorithm backed, some of them are partially algorithm backed, some of them will be the central bank distributed ones. I think that consumers it's very difficult to predict what consumers are going to do. People often use whatever is the easiest and least friction solution. I mean, going back to my playground analogy, and the first kid yelling, "You've all been productized, come to the new playground," and nobody really cares. So I think it's a real unknown in terms of what ultimately is adopted. But I think that certainly the central bank stable coins will be a key fixture of the crypto landscape as they start to launch. And also, I think there still will be a place for other stable coins. It's a pretty diverse and broad crypto market out there, so a lot of things will exist.
So you've gotten all the questions so far, and again, I encourage anybody who has a question, now is the time to put one out.
I see Jonathan. So Jonathan Tower asked the question, why would an entrepreneur seek this GP out? And I would say that one of the things we really focus. So I have a good reputation in crypto. So we've been pretty deliberate about building a network in the space. But one thing that we do is very goes back to my training from Don, is we're very old school about providing value. And actually, me, someone who's had traditional venture fund experience, who has board governance experience, who has experience in Silicon Valley, has a strong network in crypto. Even though we're small investors, we are attractive to a lot of entrepreneurs for those reasons. And an example of that is on this recent deal. When they got the term sheet, our round was at a 6 million post. They got the term sheet, 2 weeks later, 3 weeks later at 25 million. And the entrepreneur came back and said, "Hey, I'm cutting everybody in half because I feel like I'm giving away equity." And we didn't really say anything. We just said, okay. And we continued to just add value. We made a few helpful introductions for them. We sent them a flow developer, which they really needed, because I had a relationship with a CPO who had to let go of, they shut down their operation. And so we really focus on adding value and building a reputation, kind of one cobblestone in the path at a time. And I think that will pay dividends, and it's going to take a long time. We're new, we're building a reputation, but I have been in the space for almost 4 years. And we really try to like get into the trenches and help people do the hard things that they're trying to do. I know what it's like to be an entrepreneur and start something from scratch. I started the UVF fund from scratch. I've started this firm from scratch. And so I'm different in that I have traditional venture experience, and I also know what it's like to have to build something out of nothing. And I think entrepreneurs appreciate that.
You have 2 more questions, Jared. The first one, even standard Q&A, is do the traditional venture criteria still apply? Isn't the new capital formation paradigm based on decentralized autonomous organizations?
Yeah, so I think that the physics of business still do apply. I do think that these things are the future. So I'm doing 2 things. I'm saying, yes, these tools are the future. I believe that so much that I'm only focused on crypto, which is unique for somebody who's had traditional venture experience for more than a decade. But what applies is more selective. So I do believe that investing in really foundational people still applies. Investing in really large markets still applies. And, making sure teams have reasonable capital requirements to build whatever they have to build still applies. In fact, crypto is even less, which is why I'm hyper focused on a small fund, because teams just don't need the amount of capital that they used to because of the reason you point out. They can access these other pools of capital more easily, more quickly. But they still do appreciate the network and knowledge and connections and help that come from an early backing. Is there some kind of advantage, defensibility? In crypto, we often look at that in community support. So we are kind of looking at that through that lens of what is a DAO is meaningless if nobody really cares about it. So why is someone going to care about your project? It either has to be a really great product market fit, or you have to have a story that's really compelling. Like, what is really going to give you an advantage? And there still has to be a way for investors to get a reward. And I think a lot of people thought, oh, this is going to kind of change everything. But you know what it looks like is you invest early in a really successful project, and you become and you can become you can garner an outsized reward from that. So I still think these kind of basics about venture investing still apply.
So one of our attendees would like to know, how do you value a network token?
Yeah, well, what's the price? I mean, what's the price of the? I'm not in the weeds in terms of engineering a specific price based on very specific milestones. I would say in general that if you have a platform or a network that is widely adopted, that there is a chance for that to manifest its value in a token, for instance, if that token, if it was architected in a way that can reflect the value or the demand of the service. So if you just take Ethereum, for instance, you can gain some kind of understanding about how valuable that network is based on what people are willing to pay to use that network, and how much and that is manifesting right now in gas fees. So that's just one way to value a network, is just what are people, and this goes back to kind of fundamentals, what are people willing to pay to use a product or service?
And the next question is, many of the teams are now staying anonymous on purpose. How do you evaluate a team in that case? Or if they're anonymous, are you just going to stay away from it?
Yeah, so that's a great question, because I don't invest in anything over the counter. I'm not investing in any tokens on the token side, I don't invest in anything that unless it's a follow-on investment that is just available without access to a founding team. So that doesn't, I avoid those. We're really investing in teams launching projects. So that's really part of our strategy.
I think you have a question on the chat from Christian. If you can see that, Bitcoin is a DAO.
Oh, is Bitcoin a DAO? I wouldn't really consider, so DAO stands for Decentralized Autonomous Organization. And I wouldn't consider Bitcoin a DAO in the way that people usually refer to a DAO. I would consider Bitcoin more of a network, a monetary network. There are a number of projects now that are more specifically focused on a DAO, which is a decentralized structure that can really sort of operate and coordinate its efforts in a way that's more sophisticated than just a platform. And it's a great time. And this is a great point a great time to kind of point out that if you look at a definition of what is a traditional company is really a group of people all coordinating their effort around a common goal. And what a DAO can create is the same thing, coordinating the efforts of people around a common goal in a just more distributed and disparate way. Companies and DAOs, are very similar, and we're going to kind of see that I think play out over time.
Okay, I've got one more question for you from Emily Walker. Are you interested in others providing projects to be considered, investment in your fund, or both? If you're interested in seeing projects, what kind of information do you require?
Yeah, absolutely. In fact, a lot of our early investors in the fund, like Jack Herrick, who is the founder of WikiHow, Eric Allabest, who's a founder of a tech gaming company. These are folks that are helpful resources in terms of deal flow. So for sure, send us deal flow. Happy to look at different projects. And in terms of what to send, if there's a deck or an overview or a white paper or just a connection to the team, their background, something like that would help us get started.
Wow. There's not everyone can field questions like this. So nicely done, Jared. Really, it's a treat to have experienced, smart people answer questions in a meaningful way. So, and I have no reason to rub you the right way, but that was awesome. And thank you, Wendy, for doing all that. So how would one go ahead and, aside from, we're going to put you in touch with everybody that registered and who's on the call, does one go through your website or go to AngelList?
The easiest thing to do would just be email me, jared@peer.vc, and I can send you a package that includes a kind of an overview of the fund, and then a diligence data room that has we send out monthly updates to investors, and you can read the previous updates that we've been sending out, and kind of all that documentation, including the fund docs. It's probably the easiest way to go forward.
Perfect. Simple and straightforward. Great. So Wendy, hop back on for a second. So thank you all for your questions, and Wendy, thank you again. And Jared, that was super, super interesting stuff. I was glad to see we got lots of questions, and we'll make sure that everybody's in touch with you directly. And maybe we can do this again as things move along.
Great.
That would be fun. And Steve, I know you're out there. Thank you once again, and all of my friends that are on the call. And as I often say, thank you for spending the only thing you can't make more of, and that's your time. Talk about limited availability, right?
That's real scarcity.
Yeah.
I appreciate the invitation to be a part of the platform today and the connection. So everything working with you guys has been really great. I appreciate it.
Yeah, that's awesome. Thank you for the kind words. So until next time, folks, thank you all for being here. Take care.